Welcome back to my channel, everyone. Thank you for tuning into this video. It's for sure going to be a good one. If you're new here, make sure to hit that subscribe button below. And in this video, we're going to talk about a 83,000% return on Gamestop GME call options. Now, Gamestop had a massive short squeeze today, and the shares and its options absolutely exploded. So first, we're going to break down the context of this trade, why it happened, what caused it, and what we can learn from it if we understand our risk. And then later in this video, we're going to break down some market context with the overall market and some great trades that I took and some setups that members have capitalized from in my Discord room. So without further ado, let's get right into it. So here on the left, we have GameStop stock. I'm going to maximize this. For those that don't know what GameStop is, it's an American video game merchandise retailer. They sell games, consoles, anything to do really with video games. So today was the first day we broke above 50, and you have to understand that price and volume are the most leading indicators. As you can see from today, the volume down here was the most highest as it's ever been, recently. The past price action, we've been moving up and we've been fading up, gap up, fade, and today was different, obviously, with the most, amount of volume. Now, it went from a low of $42.30 or so cents to a high of 76.76 for about a 81.37% return from low to high if you were to trade the stock. Now, I put this on my Instagram story. I'm going to leave this right here. For those that do not follow my Instagram, I'm going to link this in the description below. It's a very good trading resource. I post daily trading recaps along with very good trading tips and tricks. I would definitely recommend you to follow this. Link is in the description below. But the option, the 60 calls on GameStop for today's expiration, went from a low of 2 cents, as we can see here on the right, and went to a high of $16.70 for a 83,400% return, as you can see from this chart right here. $20 from low to high would have made $16,700, and 2,000 invested would have made 1.6 million. No one is getting from low to high, but just to explain and illustrate the power of options and how crazy volatility affects pricing, and same day expiration with a really crazy short squeeze on the underlying stock goes to show you the power of options and the leverage that it produces if timed right. So there's some key points which really fueled this short squeeze on GameStop. The first one I want to go over is institutional ownership was very high. And what we define this as is the amount of stock that is owned by big banks, insurance companies, investment firms, mutual funds, pension funds, anybody with a deep pocket that could aggressively move the market very fast and efficiently. So institutional ownership was very high. And we also have to understand what a float of a stock is. So the float is the shares issued to the public, which the key point is they are available to trade. We have something called the shares outstanding, which you're going to see in the next picture, which is the number of shares that have been issued altogether, while the float is the shares that are available to trade. Now we have the high short interest with GameStop, GME. So short interest is essentially the number amount or the percent amount of shares which are sold short and have not been closed out or covered. Now, there's two types of positions obviously in the market. One is a bullish position where you can long the stock or actually buy its physical shares in hopes that the value of it is going to increase sometime in the future. And then we also have something called shorting or selling short, which it does not physically own the stock. We sell it before we own it. We have to use margin. And this capitalizes on a downside move where we want to be bearish on a stock and we expect its value to decrease sometime in the future. So it had a very high short interest. A lot of people were short and the institutional ownership was very high. Now, if we look at this picture right here, you can see down here that the shares outstanding was around 70 million and the float of GameStop is around 49 or 50 million or so. Now, the short interest of the float was around 71 million. So a lot of people are again going to ask, how is the shares that are short over both the shares outstanding and the float? Now, Again, for you to short something, you do not have to physically own the stock, but eventually you have to buy to cover to close that position out. So we had more people short the stock than we did have in the actual shares available to trade in the public. Now that is an issue. Now we have something called the actual float, which is essentially the shares, available to trade plus the shares short, because those shorts become buyers. Short sellers are one of the first buyers in the market. For you to close out a short position, for you to take it profit for something that you do not own, you have to buy it back. And for you to buy it back, you must buy to cover. So essentially, these short sellers are buyers in the market, and they essentially fuel prices higher once there's an area where people are stopping out and where people are buying. Now this also, as I mentioned, what I define as an upside down float, which is where more shares are held short than the actual float, as you saw from that picture in the past. And then what really fueled this move, and this happens before with Tesla, back when it made its massive rally, you have a large army of retail buying. Shout out to Wall Street Bets on Reddit and on Discord. You have a lot of people, which you're going to see, going crazy, YOLO call options, buying this like crazy. A lot of people were talking about this on Twitter, on Reddit. So you had a very large army of retail traders buying this. And this was also at the same time shorts were covering, shorts were stopping out. For them to cover, they have to buy. So on top of retail buying and on top of shorts covering, you have tons of people buying. Picture you going to a gas station when your tank is half empty. You put more fuel in the tank. Now that car is going to ride so much better. Same thing. Massive short squeeze. Now, you can see here on this illustration that, GameStop short squeeze was pretty much the highest today, around 71 million. And again, with institutional, with people that have a large following and large power. Citron Research, if you don't know what they are, it's been a publishing column for over 16 or 17 years. It runs an online stock commentary source, and the one of the main authors and editors is a very big short seller. So he said that he's going to buy, or GameStop is going to $20, buy or sell at your own risk. So he was very short on this, which again fueled that crazy move to the downside. So on Wall Street Bets, if people know what Wall Street Bets is, you had this crazy move from retail buying. You had people making ridiculous money. They bought 100 contracts almost for 5 cents, which cost around $588, and $588 made 116,000. You had somebody else, his account, he made almost 150,000 on this. And he was in this position for a while because today he only made 15,000 on it. Another person over 6 figures on this. So, this person, I could pay off my student debt. Let's do this, $21,000 on this trade. So you had people YOLOing, which basically is not giving, a damn if their position went to zero. They took the risk. They understood their risk. With options, your position could go to zero, and it paid off big. These things do not happen frequently, but when you have a mix of events, such as these key points with retail buying and shorts covering, it leads to a massive move. Just goes to show you the power of Wall Street Bets and major names that have an influence on the market, what they can do when certain things line up. It's like certain stars aligning. Once they align, you could see its figure. It's the same thing with stocks. You have to understand the auction process of the market and how certain things move. So if you're enjoying this video so far, if you could just take 2 seconds, I would greatly appreciate if you would just subscribe to my channel and also smash that like button for me. It helps the YouTube algorithm spread my message and spread my video to a wider audience in the trading community. So you can learn a lot about psychology just by looking at the chart. And this chart, we obviously bounced at that demand imbalance on Tuesday, on Wednesday as well. And then we missed it by a couple of points on Thursday. And then today was the massive rally with the volume. So you have to understand where people's stop losses are going to be on a chart. Maybe above a major resistance level around 45.50, maybe above pre-market highs at 47, maybe even a half or whole number. $50 is a good range as well. So when they stop out, they buy. When retail's buying, fuels the move higher. What I want to explain to you all is that this is a very big gamble. If you get into the move late, you're going to get screwed. You're going to buy at the top and sell at the low. This thing was halted twice. But if you just started getting on your radar, maybe up here, and you're buying it, you get dumped on, you're gonna get screwed when you sell. You have to get in before the hype. You have to get in before the news. You have to get in before all this volume comes in. It's the same thing with, buying the rumor and selling the news. When everybody's in on it, when there's so many buyers, there's going to be no more buyers left. And when there's so many sellers, there's going to be no more sellers left, and it's going to reverse. Same thing in this case. The market makes a high whenever the last short essentially gets stopped out and when there's no more buyers buying. So if you're late to the party, it's better to just avoid this. Yes, you can make money, but 9 times out of 10, you might get screwed. You might take a big loss. You could blow up your whole account. Just understand your risk. I personally do not recommend these types of plays if you do not get in before the hype. If you get in before the hype, just sit back, watch everything develop, know where people are going to get screwed, know where people are going to get rewarded, know where people are going to be happy, and then take your profit and exit accordingly. And then this is going to bring me back into Wall Street Bets, because you have some people that actually did fuel this move and caused retail buying to pump it. And then you have some people that have no clue about trading. They treat it like a casino, they gamble, and they lose it all. So this person said, I'm ready to run through a brick wall. Then you have this person, which, is too stupid to understand this. Is he going to buy the stock? He's looking for other people's opinions. You have other people that have a strategy. They just want to buy if it goes up, buy if it goes down, hit the jackpot, and not care about nothing. They're just YOLOing in. They're going in with, no risk. $450 to 100,000 in 2 hours. This person was all in. This person's going so deep on this play. He's not missing it. This person has no clue. Again, there's some people that, have no clue. They just get in, and some people actually make money off of it. So then you have some people, 90% short interest was still available. There was halts. This person was too late to buy. He needs advice. Is it a casino? Again, if you want to gamble, go to a casino. Don't put it into the market. And yes, this made some people millionaires. I just saw another Reddit post about somebody that made a little over $1 million on this trade, which is pretty crazy to even think about. It is possible, but again, the chances of it happening 9 times out of 10, you're going to lose it all. So it just goes to show you the power of Wall Street Bets and people that are all on one side of a trade, and how an army could actually influence a price once all the stars do align. So shout out to Wall Street Bets. Shout out to the people that did actually make a ton of money on this. Yes, you did gamble, but it did pay off. Now for a couple of trades in the Discord. The first one we have is Fubo, which we had demand at 31.12. We're gapping up. It had a price target upgrade yesterday. So let's just go back to the trade that I took yesterday on Thursday. We bounced that demand. And then if you were watching the context of this trade, pretty much every dip was getting bought up. So if I go here, what made me get long was we were holding. We had a price upgrade. Volume was coming in pre-market. We gapped up. And on this third candle around 9:40, 10 minutes to the market open, we dipped down, but buyers were very responsive down here. I saw they were propping the stock up. They were being aggressive. So I took this trade long with my stop below the low, targeting the first supply imbalance up here. And then we had another supply imbalance around 35.24. But we sliced through this supply like butter. We eventually pulled back. Again, a trade isn't going to work 100% of the time, straight up in your favor the whole move. You're going to have to sit through some pain. You're going to have to respect your stop, whether you raise it or keep it at the same level. This thing was consolidating. It was consistently making lower highs and higher lows. So if you did look at this wedge pattern intraday, we did finally break out of it with volume. We eventually did back test this level, and by end of day, we did hit our full target. So that back test is very, very key. This was a nice trade. Then today we were opening up flat, and if you look at this area, which was the low of today, this was at the same point we had this consolidation period here, right here. So what you have to understand here is that the market is an auction process. You have longs and you have shorts built into the market. You have areas of interest, you have areas of imbalances, and you have areas of balances. This right here is a balanced market where the participants are in equilibrium. You have buyers and sellers agreeing on price. So today we pulled back into this area. The people that were long in this area defended this spot. It actually bounced at the low, and then today Fubo actually came out with news and rallied about 5 points or so higher. So this was a very, very good trade. AMD has been another good setup. This was in the plan on Tuesday. I was long as above 86.36. We had demand around the $88 level. Price on Tuesday sold off right into demand. We had decent volume, and we actually made a higher low inside of demand. So that is a bullish sign here, along with this lower wick. And from this daily demand zone, we finally moved up, especially with Intel earnings today. We were gapping up on AMD, hit a high of 95.95, about 8 points or so from this demand buy imbalance from the pre-market plan. Also, now for some market context, let's first go over yesterday on the S&P 500. It's the overall market. It helps me gauge imbalances and balances. It also helps with the equities, the underlying stocks, and options that we do trade. So yesterday we had a supply imbalance at 38.51. I did a recap on my Instagram story on this, but we sold off. And what I saw here, you're not going to see it from a candle chart. You're only going to see it from price. So a lot of people think that the candlestick charts will paint the picture. They do, but it's more about reading price action as it's developing to see, large orders coming through, seeing how price reacts to certain levels. Every time we came into the 38.37 level on the S&P 500, you could obviously see it from wicks right now. But buyers were propping this stock higher. They got it up. Came back down. They got it back up. So now buyers, I know, are factored into the market. The second test proved they were strong. More tests will test the actual interest of either participants. So now buyers have to get rewarded some way. So we, in fact, did. If we did not, we continue lower. This stock would have eventually sold off, but they got rewarded. They were happy with their position, ran it all the way up into supply where they filled more sell orders because we have a sell-supply imbalance. And inside the supply zone, we actually failed to stay above the high, which is a bearish thing, and we sold off about 16 or so points. And then eventually, end of the day, we came back. We double topped at the supply, sold off, and then that was a nice short if you traded futures throughout the overnight session, as we were consistently making lower highs and lower lows overnight from that double top. So going into today, the pre-market plan was we had a bunch of supply zones lower that we were focusing on. We were making lower highs and lower lows. So I thought that this was going to be a massive trap for retail traders, especially that we broke above this trend line. If I show you what it looks like there, we had this trend line, we broke above it. Let me go back, show you these drawings. So we had supply up here. We had also a supply zone there and supply zone up here. So we rallied. We held above this wedge, so that is extremely bullish. And a lot of participants saw break above this trend line. If you don't understand the supply and demand strategy, you would have taken this long inside of a supply zone. That is a big no-no for me. We have a sell imbalance up here, where this did produce a nice 14 or 15 or so point drop, where we in fact did bounce off it not once, but twice off of this back test of this trend line. We tested the supply again. More tests make the level weaker. Came up and we actually hit the supply imbalance end of the day where we sold off. So a very good trade here if you took the first short of this supply imbalance and if you understood the psychology behind these supply and demand zones along with retail buying and selling. So I hope you did enjoy this video. If you did, can you just drop a like on this video, share it with other people in the community? It would mean a lot to me. Also subscribe to my channel and follow me on Instagram. I'll see you all at the next video. Peace.